So let's focus now on gold, which hit a record high of $3,500 per ounce US briefly today. And we are joined by a guy who's long been a fan of gold, John Ing, President and CEO of Maison. John, great to see you. What do you think the latest catalyst for gold has been?
Well, for the last little while, it's been Trump. And I've been saying for a long time that the best Trump trade is gold. But we must remember that gold is an insurance hedge, an insurance haven. I remember during the 73, 2008 sort of market collapses, gold, hit $1,000. COVID, it hit $2,000. $3,500 today that's a reflection of all the world uncertainty. But my expectations, Andrew, it's going to go a lot higher, and it will surprise, again, everybody.
You reckon that the best Trump trade is, in fact, gold. Is that because the guy is so unpredictable and is said to have sparked a flight on the part of some investors from the U.S.?
Well, there's no question there's chaos. But for a long time, I've been saying that the Achilles heel of the American economy is their debt. And I've been ringing that bell for some time, and for a lot of people, they really didn't care. But the fact remains is that a good part of that debt is owned by foreigners. And for a long time, the U.S. dollar was a pretty good haven to be, a strong economy. But now Mr. Trump is setting up protectionist walls. He's attacking every other country, including some with penguins. The reality is that he's made U.S. assets very uncertain, very unsure. And after all, the U.S. dollar is backed by not by gold anymore. It's backed by the confidence in the American economy. So when you dent that confidence, either through tariffs or whatever, or attacking your neighbor, that sort of not leaves a bad taste in your mouth, but there is a confidence in holding American assets. So there's a repatriation of dollars, so to speak, and gold is a beneficiary of that, because the universal medium happens to be gold. And exchange among countries, just about every central bank, major economies, have gold in their reserves, with the exception of Canada, of course. We sold all our gold, unfortunately.
Oh, no. You got out?
Yes, well, it was during the Mulroney days, the central bankers decided that we should not own that relic. And lo and behold, for the last 3 years, central banks around the world, led by China, have been sopping up 20% of the supplies of gold. And that's the real reason why gold is going higher. Yes, today it's retail buying, but central banks have been the prominent buyers, and you have to question why. I think that a lot of central banks realize that America has a debt problem. Now there's a Trump problem. And the reality is that all that debt, those chickens come home to roost one time. And I think that that's what's happening now. There's just a lack of confidence in the American economy, lack of confidence in the American dollar. And then what is there to trust? And that's where gold comes in.
What about silver? Do you think silver will get lost in the shuffle here? It's a much smaller market, for example.
That's a good question, Andrew. Silver is a byproduct mostly of industrial production. It is sometime historically, in fact, the Americans once had backed their dollar behind silver. The Chinese too had the renminbi backed by silver. But it's not really a monetary metal. It's a precious metal, but not a monetary metal. The advantage, or why gold is going higher, is that unfortunately we're not finding enough gold. Barrick is, as Barrick has said, they're selling some of their gold assets. The reason why Donlin Gold is going to cost some $7 billion to put into production, if they can, because there's a 200-mile gas pipeline that they're talking about. That is very expensive. It's very expensive to find gold nowadays. Mm-hmm. Average cost is around $1,500 an ounce, and sure, the existing producers can make a lot of money, but it takes 15 years, possibly, to bring a new gold mine to production. That's why I like the developers.
That's interesting. The developers you like, John, even though their mines could take so long, years to come online?
Well, the developers have already found the gold in the ground, so to speak.
Right.
Now it's a question of financing it. And definitely with gold at $3,000 plus, it's a lot easier to finance gold, a gold mine, rather than at $2,000.
John, thank you very much. Always great hearing from you.
Good to be here.
John Ing, President and CEO of Maison Placement Canada.